All right, welcome back to the 1 Minute Trader. Welcome back to the 1 Minute Trader podcast. I'm Matt Davio, your host, and I'm here again with Tony. Tony, I want to talk a little bit about a situation I run into all the time with traders, experienced, non-experienced, and it really comes down to there's so many psychological problems that go along. We were even talking about this offline before we came on with trading that boil down to underaction, overaction, meaning overtrading, undertrading, failing to act when appropriate, overreaction, taking actions that are not warranted. In other words, seeing things maybe that aren't really there becomes an issue. Undertrading means that we fail to pull the trigger when on our ideas, and overtrading means that we trade outside of the range of our initial ideas. So I've got a Gandhi quote here where it suggests our actions express our priorities, right? The trader who fails to act is very often prioritizing preservation, self-preservation, again, run by fear. Right. We talked a little bit about this, how people, preservation of capital, preservation and avoidance of risk and loss. All right. The trader who acts excessively is meaning overtrading, is prioritizing gain and avoiding missing out. So that FOMO, that fear of missing out again, right?
Yeah.
I got to overtrade. And I see that. They're either, I got to find a trade now because I got a bill due tomorrow. I've got something I need to, I want to buy a new car. I want to pay my rent. I want to pay the water bill. I got to find something to do. And trading,
you're not letting the market do its thing.
You have to let the market do its thing. So what I find in working with traders is that underaction and overaction are both problems. They occur in really specific contexts. Very often, the trader has figured out the idea that would have got them long or short a market or a stock, right?
Yeah.
They've got that idea of how they want to behave. What they have not explicitly outlined, however, is the specific set of conditions that would have them act upon this idea.
So it's not a fully baked trade plan.
Correct. So they think they know why they want to be long or short, but they haven't outlined it. So it really comes down to process again. All right. What are the specific set of conditions that would have them act upon being long or short on that idea? In other words, they have the idea, but they don't have a clear,
it's not defined,
setup criterion that would allow them to execute that idea. So they get stuck, right?
Yeah.
And the way they get stuck is, again, overtrading or undertrading. They're both very similar. They're both fear-driven. They're both, over or under reaction. In the absence of having that clear entry or exit signal, they're left with ambiguity, right? They're literally in no man's land.
Yeah. Yeah.
And that ambiguity is fertile ground then for the psychological damage, for lack of a better word, priorities, or the priorities of the psyche. Avoidance of risk, fear of missing out, again, and they then fester, grow, and become the dominant psyche, all right? So if you allow that, because you are...
So then all action or inaction takes place from
too much action or no action, right?
Yeah.
You can't find that middle ground. So it's necessary to have some ground and sound ideas, again, process, that give you an edge to succeed in trading, all right? And we talk about this all the time. Mm-hmm. You have to have a process that you can always come back to when you stray from it and kind of start over. It's like riding a bike. You got to get on, you got to bounce. From there, you can jump curves, you can do different things, but you have to have a basis just to balance, right? So once you start the balance, then you can move forward with the trading. So that's the way that you're going to have long-term success, is by having this process, this plan. And it's like this, and I say this, it's like this in any business. How do you implement these types of ideas? Without a sound basis for implementation, these ideas can't happen either.
Yeah.
So it's all part of the process. So we see opposite problems as well. Traders will grasp at setups like, I see something, again, cognitive dissonance. They want to believe that they're short, they're long. The patterns in price movement that they think they can predict and see. They see these as trade ideas without any objective verification. There's no back testing that give you a probabilistic edge.
It almost sounds like they're projecting what they want to see on the chart rather than absorbing what the chart's telling them.
And we say this all the time. You will get exactly what you desire out of the markets. The markets will give you what you want, not necessarily what you need.
Or when you want it.
Or when you want it. Without this probabilistic process that gives you some type of edge. All right? So selling something that is holding at a level X, right, may be a useful observation, but it's not really a plan.
Okay.
Right? Why? Why is that? So a common problem among day traders, and I'm not by technical terms, I definitely hold positions. I don't get into a trade thinking I'm going to be a day trader. So let me, again, preface that. I am not, by definition, a day trader. Day traders mean I come in flat, I end flat.
Yeah.
I don't believe in that. I think it's very, very difficult. I think I've been very vocal on this, and I don't care how much money you have. It doesn't take a big account, meaning $10 million to trade overnight. You can trade, you don't need to be a day trader, so think about that. You can trade one contract. That's the smallest you can trade of anything. Okay. And you can be successful. Yeah. And you can be successful trading one contract.
You're not opposed to taking a trade within a day.
I am not opposed, but it just happens to...
That's not your nature.
It's not my process. It's not my process. So, however, those that try to day trade, there's such eagerness to trade, and that's also why we have the open hour and the closing hour are so frantic.
Yeah. Well, that's the problem, right? Like, day's ending and you're a day trader.
Where if you were really smart about day trading, you would probably avoid the open and the close and find something in between. Once you have kind of that information before knowing that that's when the day traders are behaving, don't trade with them. Trade against them. Okay? In that middle part of the day. That's one thing that I would suggest. So if you've spent no time researching a strategy or a process of your ideas that are worth trading, then you're not going to be able to have a long-term plan or process to come back to make money. Hence, you're going to fall into that cycle of over and under trading and not be successful. So once we, I think once the individual is able to distinguish between the idea that we're trading and our plan for executing that plan.
Yeah.
Because you have to discern, they're different. We're in a better place as traders to figure out what we need to work on, where we need to get stronger, versus what we need to eliminate. Sometimes it's literally, I always tell people, you're better off eliminating something in your plan than you are adding to it. In other words, don't trade that opening hour might be the one thing that sets you, and don't trade the closing hour may make you a successful day trader. Something to think about. Now you have to test that.
Right.
But it might very often prevent you from over trading, under trading, failing to act on the valid opportunities simply because we have not been explicit in designing our process.
Yeah.
Right? And then that idea of how we express that, if we can't tell you simply, and I say this to people all the time, trading doesn't have to be complicated. Most people they're like, well, it has to have these 29 variables. Well, you're never going to trade because the moon, how often do we have a solar eclipse? We have one coming here in Oregon and everybody's coming. So,
and it's been like 30 some odd years since the last one that was equivalent to this one.
Here,
correct. Yeah.
But they happen all over, right?
Oh, right. Yeah.
In the world.
Yeah.
That's the fascinating thing. So, maybe you need, if you're a solar eclipse trader, you need to go where the eclipse is.
There you go.
That's where you're going to make your money, because everybody's going to come and want to see this thing.
Or be very patient and wait for the ones that come to you.
Wait for the ones that come to you. Exactly. So, anyways, I just want to talk. I wanted to throw out a quick video idea about that podcast today. Process, plan, and back test always. Right. That'll prevent you from over and under trading. And if we can help you with that, drop me an email, Matt@OneMinuteTrader.TV. We hope you are enjoying these podcasts. We hope you are finding value in them. We're going to continue to do these.
Give us a like.
What's that?
Give us a like.
Give us a like on iTunes, Stitcher, SoundCloud, anywhere that you're finding our podcast. We appreciate you listening, and we appreciate the growing emails and questions. Please send them to us. It is helpful for us, because we know if you're thinking it, everybody else is thinking it. And sometimes I can't see the forest between the trees. I get a little too close. So what sounds like common sense to me is not necessarily common sense, because I've been doing this for so darn long, 27 years. But we hope you find value. And if you'd like to get our regular trade ideas, we offer a 5-minute video every day to clients that gives you a trade idea around a process. Again, we have created a process of many processes for trading, because we've been doing this for so long. We would love you to share in this idea process with us. You can sign up at OneMinuteTrader.TV. And if you'd like to have 1-hour consulting, a day consulting, we're available for you for that also. And you can find us on the website there. As always, thanks for listening. And we'll be back here next time. And have a great day. Take care.